Eager to make more informed decisions around crypto using data you can trust? Chainalysis demystifies cryptocurrency by providing industry-leading compliance, market intelligence, and investigation support for all crypto assets for organizations like Gemini, Crypto.com, and BlockFi. Maximize your potential with the leading blockchain data platform by visiting Chainalysis.com/thescoop now. This episode is brought to you by IWC. IWC Schaffhausen is a Swiss luxury watch manufacturer based in Schaffhausen, Switzerland. Known for its unique engineering approach to watchmaking, IWC combines the best of human craftsmanship and creativity with cutting-edge technology and processes. Discover the full collection at IWC.com or download the IWC app to experience a virtual try-on now. All opinions expressed by hosts and podcast guests are solely their own opinions and not necessarily those of the blocks. Podcast guests may have taken positions in the assets or other matters discussed in this podcast. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. For full terms, visit theblockcrypto.com/terms-service. Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block. And today on the other side of the mic, we have my very dear friend. Visited us at the office not too long ago, which was quite pleasant. Very snappy dresser, but our videos aren't working today, so can't see that. JM Mognetti, CEO of CoinShares. Sir, how are you doing today?
Very well. Thank you for having me, Frank.
Of course, for folks who are maybe unfamiliar with CoinShares, which is probably impossible given the eccentric presence of one Meltem Demirors, CoinShares is one of the longest operating companies in the crypto space, certainly on the asset management side of things. It was founded in 2014 and is a pioneer in crypto asset management, but it also has a wide range of services. I think you have a trading operation, you have the asset management business, you also do some venture investing. Maybe you can kind of step in here, JM, and kind of give an overview of what exactly you guys do.
Sure. The way to think about CoinShares is like a one-stop shop. And it really started in 2014 when we launched our first hedge fund, which at the time was, I think there was Dan Moorhead and us pretty much doing hedge fund work in crypto. Or solely in crypto. And over the time, we moved from a pure asset management business to a business which had another component, which was a capital market division, all that powered by our own technology. So our technology component was very, very important in terms of developing different vertical, like the asset management one, like the capital market one. And more recently, we decided to extend the capacity of this technology to be able to enter the consumer game with a small acquisition in France, which we are taking back to the market.
Awesome. When did that happen?
I think this transaction closed late 2021, and we spent pretty much the first 6 months of 2022 completely restructuring, redesigning, fixing the product, and making sure we can come back to the market with a first iteration, which we can feel proud of before accelerating in that narrative.
So what have flows look like given the current market backdrop? Have they come down? What's the status?
Well, the flow in general, I think the story of H1 for the flows in the entire industry has been like a kind of a sheer drop, which has been a function of the market price and the market action. There have been an uptick in Q2, but we are still far behind what we were doing in 2021 in terms of flows. The market sentiment was very red and very negative in H1 in general. We have a bit of a relief rally in July. We'll see if it can carry some legs in August and in the fall.
And do the flows tell a story? Is there a narrative in there?
Well, there's two ways to look at the flow. It's like you can think about it as organic and proper flow, or you think it's just market maker just like trading with themselves. If you look at exchanges like LMAX, which are solely used by market maker, you can use that as a proxy of how much of flow of the entire ecosystem is not really like organic flow, but flow of market maker, which are just netting each other on the deck. So, so the flow is just one piece of indication. The real piece of information which we don't always have visibility on is the amount of new dry powder coming into exchanges to deploy new capital and fresh capital. That's the real indicator of what the adoption cycle is. And another interesting metrics probably is like how USDC and Tether inflows and outflows are performing and giving indicator of what people are doing. So typically Tether has always been the transaction or the Friedrichian for the ecosystem. So as Tether goes up in terms of AUM, in general, you can see your trading volume going up as well. USDC is a very different animal in that sense that people use more for a store of value and long-term holding. So when people are ready to deploy, you can see Tether growing and growing fast. And as people tend to reduce their exposure but want to stay in the industry and in the ecosystem, they move to USDC. And the key metric to track here is like the mass of circulation and or the speed of circulation of Tether and Circle. And where Tether probably have a circulation of 67%. So it means that in 24 hours, 67% of the AUM has been flowing at least once. On the contrary, Circle is running around 7%. So you can really see that one is for trading and for transaction. Simple fact, you can pay a taxi in Singapore in Tether, while the other one is more for people staying on the line and waiting for opportunities to deploy capital.
You just had your earnings, I think it was yesterday.
It was.
Every day in crypto feels like a month, especially yesterday. Oh my God, everything was happening. You had 5 different earnings. CoinShares, Robinhood laid off 23% of staff. MicroStrategy CEO Michael Saylor stepped down as CEO to step into the chairman, a newly created chairman position. And then Solana had a big sort of wallet hack situation. So I didn't get much sleep, as you can imagine. So here's where we are.
Do you have sleep normally? Because it's crypto, you never sleep. So
no.
It's a normal day in the office.
I'll sleep when I'm dead.
Exactly.
So I'm sorry I didn't get to listen to the earnings, but I did read some reporting about it. Either you or your CEO talked about how basically the firm's a bit more cautious, right? You want to capitalize on growth, but you also want to be prudent. And then I think actually you said that the contagion, likely we've seen the worst of it, but you said there's some potential for contagion risk in Asia. What were you talking about there?
Yeah, let me just decompose that. We said different things, so we just want to not commingle all them together.
Yeah.
As we made public announcements, we got hit a little bit by Terra Luna episode because of our exposure to Anchor and our exposure to UST. And as a result, it triggered an internal reflection about, okay, we need to make sure we are sure that all these positions we have deployed and, we are managing a substantial book in CeFi and DeFi. And we want to make sure that we are pretty much sure that what we think we have is what we have. So it's kind of a big true-up exercise because post-Terra event, with our commodity kind of hat, we felt right away that contagion will come. We didn't really knew the amplitude of this contagion or what will be the catalyst exactly, but we had a good feeling for contagion was coming. If you look at plenty of crises, a lot of crises get their hero and their kind of anti-hero. And most of the time, the anti-hero is a hero from the previous period. And, so you look at commodity cycle, you look at Brian Hunter in the natural gas industry, you look at LTCM, you look at Enron, you get plenty, or you look at Metal Gas Shell Shaft, you get plenty of examples through our commodities years, which reminding us of what was happening. So based on that, we said, okay, let's make a big true-up exercise and start recalling all our positions, start effectively making sure all our assets, which were spread out in the ecosystem, can come back home, and our CFO can account them properly as at home. And that was kind of the exercise we start doing, which we are, to a small degree still doing, because there is still some stuff we are cutting back, but it's something we have been doing at scale, and which is, I would say, 95% done now. And that was an important exercise.
This was on the capital market side of the business.
Correct.
Just to be clear, I want to kind of size up the firm just so, people understand where it's happening. The capital markets business, is that effectively that's like a prop trading shop within
It's a prop trading shop, which is completely insulated from our asset management business. So asset management position were not impacted at all by Terra. We're not impacted at all by any of the follow-up events. So it's really a discussion about our capital markets. Thank you for precising that.
Yeah.
And what we did was important. And
well, it's really interesting. I mean, if you think about the original position being $120 million, you were able to limit your losses to 17.7 million euros.
Yeah, well, give or take, we were exposed to, I think, 125 million worth of US Terra through Anchor, which we decreased aggressively to end up with a loss of $21 million. And the only way we managed to get out of it this way and not have a bigger loss is because, once a peg starts going, it's going and it's not coming back. So we were very kind of not really big believer about, the peg going to be saved by all the actors in the industry. We didn't really buy this story, and we start acting very early, and it was a one-way direction. So we agreed collectively as a firm to take our losses at the gate and say, yes, some people will tell you the peg will come back, but we were not part of this cohort, so we decided to just go out, cut our loss. So by the Monday night, so I think this depegging event started, on the Saturday night, something like this, when the curve pool started to be depleted. And it was kind of a perfect storm in terms of what happened. But at that point, we say, okay, we need to start moving, and we move in size right away. And, we spent probably 3 days in trying to exit what was left in any single form of rally we can find, because they had some rally at some point where the peg was coming back, but not enough to believe in it again. And then we got out. The whole story, as usual, of this protocol is like, it's always a liquidity constraint. The door is always very wide to get in and very narrow to get out. So you have to get first to the gate.
Yeah. It's interesting to me how quickly you must have had to move to mitigate that downside risk. What did the war room look like?
It looks like 4 days and 4 nights in the office where we didn't really take off.
Yeah.
And it doesn't happen much these days, funny enough, because I used to spend a lot of time in the office. For the anecdote, which is quite funny because, like we all growing up and we're living different life, but I used to spend very long nights in the office working with Hong Kong desk and US desk, and so trying to cover everything. So I was a kind of accustomed person of the all-nighter. And after 3 nights allegedly in the office, my partner called me and say, "Are you really in the office? Because I can't believe you're spending 3 nights in the office in a row." So she called me at 3 in the morning, putting the FaceTime, say, "I want to see where you are." I was like, "Yeah, I'm in the office. Here's my date." And this was my head of trading.
That's phenomenal. I mean, it reminds me of the movie Margin Call, when they all come back after a night of drinking, and the junior analyst or whatever says to the MD, "You need to take a look at this file or this document."
Yeah, well, the only difference is, like, we don't have the stuffy people of Margin Call, so we were a bit more flexible and a bit more nimble than that.
I don't think I've pulled an all-nighter since before COVID, honestly. I mean, I have stayed up fairly late. Like last night was a good example of just, kind of writing until 1:30-ish, but that's as close as I'll get, just because we have a fairly global team now. But when I was a bit more dogged trying to get a story out, like one time there was this project, the MakerDAO project. They were kind of splitting into two. There were two factions effectively tearing this project apart. And I met with a source to talk about it at some like very unlit hotel bar. And that was about at 12 a.m. And I think I stayed up and wrote the story till 5 a.m., filed it, fell asleep, and we published it at 7. I woke up at 8. And yeah, we beat CoinDesk by a few minutes on that piece. But that was probably the last time I pulled an all-nighter.
Yeah, well, I think it happened to us from time to time, but it always happened at the worst time. I think the last time we had a bit of a spend time in the office was just the same night of our Christmas party. So all the boys came back to the office and like, oh, now we have to go back to the office. Yeah, well, that's happening, So it's never really happened when you want it to happen. So it's always kind of an unfortunate timing on a Sunday night or company party or something like this. So it's never really fun, but that's what it is. But it reminds me a little bit of this kind of time where there was this big Bitcoin block war where people were trying to decide which size would be small block and large block. And the Chinese miner were the big believer in all-nighter, where they were discussing absolutely nothing and trying to move a comma. But it was like this kind of like never-ending long meeting trying to just decide what will be the right size of the block. And its faction were quite intense, but debating for a long time.
The block wars feels like just yesterday.
Yeah.
Well, obviously, as a reporter or as a media company, there's a lot less at stake if you miss a story. Whereas if you decide to go to sleep and didn't mitigate your risk, you're out tens of millions of dollars. Whereas I don't know. There's not as much traffic.
To be fair, it's not like I'm a one-man band, so I need to give credit to my team. And I have a fantastic team who stay up and rotate. But I felt I have a duty to be with them on the deck and not to be just at home trying to watch Netflix. It was like kind of like my job to be with them in this kind of event, which, you get some traders in crypto who comes from Wall Street and who went through fire sales, who understand this event. But you also get a lot of guys who are out of uni, that their first kind of real gig. And it's important to be there and to be able to train them and be able to, to some degree mentor them if they need to, and be with them in this adventure. That's kind of the limitation of working from home. Is if I have been working from home during my trading career, I would have learned nothing, because unfortunately, the great guy you learn from, and there have been many in my case, well, you only learn from them because you follow them very closely and listen to everything they say and learn from them. And unfortunately, in trading specifically, that was, working from home would have been very difficult.
Yeah. I mean, I wonder what, some of the war rooms or trading floors during that initial March crash, when I think we were all at home, and there were so many fun stories at the time. I don't know if we wrote anything to this effect, but the FT covered it well, where there were a lot of like latency issues with working from home and that impacting traders. It was a weird time, but I don't want to get away from the point, which is, okay, so now we kind of went through how you saw this coming to a degree as it was happening. You mitigated that risk. You stayed up late. You had everyone kind of firing at all cylinders. And you knew in the aftermath of that there'd be this contagion effect. Now it seems like we're at the tail end of it, but you still see some risk in Asia. Can you unpack the Asia risk?
Yeah, look, it's guess feeling. It's more
sure,
like,
it's a guesstimate.
It's gut feeling. It's not like I have proof or I'm saying stuff which are like tangible. It's like
you're not trying to FUD, but this is your
it's
feeling.
Like, it's just a question of like how many shoes need to drop before you hit the bottom. And first of all, crypto is a private company environment. So a lot of information remain private and is settled behind closed doors. So when Steve come out of Voyager and say, okay, well, we have a problem, he's the first one to do it because he doesn't have a choice. He's like a public company. He has to make the announcement. So he's the one who take all the heat. But, if you look at the bankruptcy statement and you compare it to Celsius one, it's, the document they produced and provided was of a much higher quality. So the public company element has some kind of benefits in terms of the disclosure and what's happening. Now, that's not the case everywhere. And on top of that, a lot of companies in crypto are, BVI, Seychelles, like
Yeah, there's not as much disclosures that
So it's like the opacity, despite all the progress we're doing, is quite intense. So you don't have as much information as you want. So what we see is as follows: like in this kind of situation, you have the counterparties you make business with normally, and normally you think they're good, but in this case, by default, they become suspicious because even if they tell you they're good, you don't know what they have in their book and against who they are exposed. So that's this kind of domino effect where you end up having a relationship with A, but A also gets relationship with X, Y, Z, and that's this X, Y, Z relationship you don't really manage, and you don't even know that A get this relationship. So that's this kind of massive game theory which are putting in place. Now, what is interesting is like in terms of like contagion, we heard story pretty much everywhere in Europe and in the US, but like for some reason Asia managed to be safe and manage their book properly. I think what's happening in this event of contagion is exactly what's happening in 2008, where nothing is safe, nothing is known for sure until you get to the bottom of the book. And the fact that no news is coming from China or from Asia in general is quite surprising, especially when you know that all these companies were also exposed indirectly to the big catalyst, which was Three Arrows. So there is something which doesn't add up completely, and maybe it's being settled behind closed door, but I'm remaining cautious. I still believe there is what Arthur Hay, I think, called a floater. So I'm going to use his terminology for this one. Like, I think there is this kind of zombie which are still walking around, not knowing they are in a bad situation or trying to save the day because their loan has maturity and they don't need to repay it until the end of the quarter or the end of the next quarter. So they say, well, maybe we can make it back or we can find a way to refinance that in between. So I think you may see some interesting things coming. I don't know if you saw that, but Babel Finance missed a payment on Maple early July, which triggered a default event on Maple from Babel Finance. So it's a question of like figuring out who is doing what. And I think we had an attempt of transparency in Europe and in the US, mainly driven by the like of Alameda and FTX, trying to push the envelope to see how clean we can get the situation as quickly as possible. Because I think the important point to not forget here is like the people who get hurt is retail investors. And if too many retail investors get hurt, then the regulators step in heavily. And if they come with a heavy hand, then the whole industry suffer and the whole industry doesn't grow properly because we have to fight against overregulation. So I think a lot of people were looking at how can we sort out the situation as quickly as possible in Europe and in the US so as people don't get hurt. And kudos to everybody who get involved in that. I don't think we have the same transparency operation in Asia. So I would say time will tell.
Are you eager to make more informed decisions around crypto using data you can trust? Chainalysis is here to help. Chainalysis demystifies cryptocurrency by providing industry-leading compliance, market intelligence, and investigation support for all crypto assets for organizations like Gemini, Crypto.com, and BlockFi. Gain unparalleled visibility and maximize your potential with the leading blockchain data platform by visiting chainalysis.com/thescoop now. This episode is brought to you by IWC. IWC Schaffhausen is known for continually innovating within the world of Swiss watchmaking. A pioneer in the use of titanium and ceramics, IWC today specializes in highly engineered watch cases manufactured from advanced materials such as colored ceramics, ceratanium, and titanium aluminide. This year's collection includes colored ceramic pieces in Lake Tahoe white and woodland green. Discover the new collection at IWC.com or download the IWC app to experience a virtual try-on now. What's the state of institutional leverage right now? On the trading capital markets side, is it easy for you to lever up or to have folks extend capital to you?
Yeah, CoinShares always got access to its credit line. We have been working with our credit facilities for years now, so we don't really have a liquidity issue. We can leverage ourselves up if need be. It's a question of finding the right opportunities, and right now we don't really feel the need to be leverage up. Now, what is clear is like there is a massive squeeze in terms of available capital. A lot of firms were used to borrow in an uncollateralized manner, especially the mid and small market maker. This is not happening anymore, or if it's happened, it's going to be repriced fairly aggressively because all of a sudden people realize the risk is very different, or they realize the risk is what it is more precisely. And at the same time, we get the Fed hiking. So, you get Treasury at 3%. Paying 7% is not so exciting versus paying 3% when the Treasury are paying zero. So I think it's a question of like repricing of this loan and finding people who understand what's happening. I do believe DeFi infrastructure is quite important in that process, because what we've seen is like the disturbance come from the chaos created by black box, which are these big CeFi lenders. And I think DeFi has a lot of benefit to that point. So, everything like Clearpool, TrueFi, Maple, to quote a few, have a lot of work to do to improve the protocol, to improve what they're offering, so they can bring to the market a new platform which guarantee or attempt to guarantee transparency.
Yeah, I mean, that's kind of one of the big stories out of this event, the juxtaposition between the centralized lending platforms and the decentralized lending protocols, with the latter really being kind of robust. You can't ghost a smart contract, right? It's built in a way that you have to pay back that loan. Looking at, I think you guys are coming into the United States, right? Or kind of plotting a move into North America.
We're taking our time. Let's put it this way.
Yeah.
It's like,
yeah.
We're building our European operation. It's something we have to keep building. We get this leadership position in Europe. There is a saying which is the US is a graveyard for European elephant. So we want to make sure we're not becoming another victim of that, because it's there's a lot of things to take into consideration. It's not just about hiring people; it's about bridging culture, bridging the way people work, which sometimes is different. And it's also about bringing products which are working well. For instance, our asset management business will never be able to come, at least in its existing form, to the US, because all our listed products are not marketable in the US easily. So, unless we redevelop a full distribution team in the US, there is not a lot of upside for us. And at the same time, the asset management program we're doing are not authorized in the US so far. So, it would be very counterintuitive for us in 2022 to make an application for yet another trust.
You'd also have to come here all the time, which would be annoying.
But I can visit you this way more often.
But then yeah, exactly. Then we can get nice dinners and hang out. When you're building in a new country, in a new market, you really need to have boots on the ground. And in many ways, it's a Herculean effort.
It's a big effort, but it's a fantastic market at the same time, because the US is such a big, you make business in Europe, you get like X number of countries, depending if it's post or pre-Brexit, where you're authorized to make business. The rules are changing depending on countries. It's very different languages, different rules, different customs. You move to the US, you get this massive market opening to you, So it's not for no reason that the US is still the biggest capital market in the world. It's just because there is massive opportunity in front of you.
Now that the dust is settling to an extent, where are the opportunities as a proprietary trading firm right now? Things seem a bit quiet. Where are you finding alpha?
It is quiet right now, but it's the right time to build, So, when the market is completely crazy and people are calling in all direction, and
so is that like fine tuning your algorithms or something like that?
It's time to build. It's time to do some more research. Time to do some more work on the ground. So we're just like busy doing engineering work and catching up with what we don't have the time to do when the market is red hot. So it's a good time, and it's actually a refreshing time to be in, because you can really focus on what you want to build and how you want to build for the next phase. But, there's plenty of stuff to look at, like this, as I mentioned before, this old DeFi ecosystem is like, what people do is really scratching the surface at the moment. It's like really, if you want to go deep into DeFi and understand it properly and be able to trade effectively in a DeFi environment, it takes much more than just reading and a couple of smart contracts and code a couple of lines solidity. So there's plenty of things to think about. There's all this kind of argument about bridges.
JM, is there anything you won't touch now? Are any yields above 10% just gonna send you running the other way? Or algo stable coins, are they off limits now? What are you telling your risk department not to, or what is your risk department telling you maybe?
Yeah, it's more like what they tell us not to touch because no, I think in a very candid manner, it's like you always get this power play between risk and trading, where when you have some good result, the risk tend to say, okay, it's good, but it still tend to keep a very strong focus on you. And the moment you get an accident, then you get they tend to take over and like start to look at you even more, and then everything become a big discussion. So it's a question of like being able to normalize the relationship and make sure we stay business focused and business centric. So it's not a question of what being off limits, it's more a question of like how do you educate.
Yeah, fair enough.
It's a brand new territory for everybody.
Yeah,
Like compliance, risk, all these people are also discovering. And one who brings them new ideas, like, oh no, they find out something new. so it's not always good news for them because it's like new stuff to learn. But like we are very lucky because our team is very, very pro innovation. So they kind of dive deep into it and look into it whilst trying to keep us safe. Like the idea of a risk and compliance team is not to say no to things, it's more to say, okay, well, that's okay, but did you think about the regulation about that and what it means? Because the biggest problem for CoinShare is like, well, it's not a problem. It's like more of an ethic point of view. It's like, having been regulated all our life, even in our previous kind of career, it's very difficult to say, oh, this is not securities. Let's pretend as if they were not securities. So we have always acted in our trading as if these assets will be deemed as securities at some point. So, there's plenty of stuff we refuse ourselves to do.
got it. Carries some costs and also, kind of pigeonholes you a bit into some of the opportunities you can go after.
Yeah.
That makes sense. In hindsight, everything's 2020, which is a trite thing to say, but true. And, the fact that you can just tell, like, one thing's for sure. You mentioned LMAX. I spoke with David a few days after Terra blew up. He's a very passionate man. Have you ever met him?
No, I never met him.
Whenever he's very excited about something, he just bangs his table very hard, which is like, I don't know if Steven, our audio engineer, ever had to edit one of his shows, but he's like slamming on the table when he's making a point. Anyway, he said for Forex guys, I don't know if you have a Forex background, but he saw it coming because all pegs are meant to depeg at some point, which kind of scared me because I'm thinking, oh, well, not Tether, right? Please not Tether, because that would be really bad.
Well, look, I think it's a Soros quote. It's not a David quote, which is every peg is meant to be broken. And that's something Soros make a life, like a revenue for himself, breaking the Bank of England. And look, you can't compare, whilst being intellectually honest, something like Tether or Circle and something like Terra UST. It is just not possible to compare them. One is algorithmic, not really backed, if you look at it properly, with a kind of fulfilling prophecy loop in the middle where, if Terra starts to be attacked, then Luna goes to zero. So it's all built on trust, while the other one is built on reserve. Now, I appreciate people have question about Tether reserve. I think these guys are doing all the work they can to make the market comfortable and feeling they're doing a good job. So far they have been doing some incredible amount of redemption without a problem. So, CoinShares never had a problem trading Tether, and CoinShares never had a problem trading USD Circle. Now, these two things are much more akin as an animal to big money market fund than anything else.
That's really what they are, except they're not kicking back like that yield to the user.
No, they're not. But like, in terms of management of what they are in the back end, it's like really functioning as a money market fund.
And that's why some people are a little worried that the SEC might deem it at least USDC as a security. But I think they've moved to full cash reserves, which maybe changes that situation. In any case, we're going to have Paolo Ardiono on the show.
You should, because he's a great advocate of what he
I
does.
know.
And
Yeah.
he's a very, very entrepreneurial person as well. So
Yeah.
he's a good client for the show, definitely.
Yeah, I think so. And the one thing I like about him is he's very transparent, at least to me. Things crop up, things pop up, and I hit him with a question. He typically responds fairly quickly and gives color, gives context. But there's always many sides to a story. What's the
Yeah,
expression?
look, like I can only go with what I know.
Yeah, yeah.
CoinShare and myself have been working with Bitfinex since 2012.
Yeah.
Tether, we've been working with them since 2016, 17 when they get created. Now, what people forget as well too often is like, why does Tether exist? Tether exists because the bank were trying to kill the industry.
Yeah. Yeah.
And it's very easy for the bank to just say, oh, these stablecoin are not okay. But like, they're really here because exchange like Itbit in Singapore were having every single wire denied because the moment you were sending money to, what was it, bank? Standard Chartered, you were clearing through Bonnie, and Bonnie was like, nope, decline. And, the money was going back to your account minus $25 commission for Bonnie. So Tether in the beginning was created as an entrepreneurial project to make sure we can fluidify the system where all these exchanges try to function and they were blocked. So it was a clever idea which was put together, and they try to scale it in them. Now that's what I'm saying. We've been working with them. We never had issue with them, and the team, as you said yourself, is always answering us and always ready to answer any question. So we can't blame them. We can't blame them for that.
Yeah. Yeah. I remember when we first started the block, we wrote a few pieces that fired up the Bitfinex folks, and we broke some stories about their thorny banking relationships. And one of the firms that kind of were at the center of it all was this company, Deltec. And I can't remember, but I think we brought to light that they were banking Tether, and it kind of caused some issues. I see this guy who runs Deltec. He's hilarious, first off, but he flags me down in the Bahamas, and he's so funny. He goes, I can finally yell at you face to face. And I said, at least you're still around. You're surviving and thriving. And we just had like a big laugh. And
look, it's hard. It's hard. They're not gonna bank Tether with Goldman Sachs. It's just unless the world turn around. But
yeah,
this has been created because the bank were trying to kill it.
Yeah,
or to kill crypto in general.
But this is what makes crypto interesting, right? There's all these weird dynamics, all of these weird storylines. I think like one thing that maybe you can help me with one day is when I want to write like the liar's poker of crypto trading. Everyone's written books about the technology, but no one's really weaved a whole narrative about these different desks that, are it's kind of weird. It's kind of different, right? Like everything's happening on Telegram. None of the traders I know have like Bloomberg terminals. There's this weird element of the early days. Like I've talked to people like Michael Morrow about, in 2013, people would show up with briefcases of cash looking to make an OTC trade. I mean, it's just such a rich market for storytelling.
It's changing very fast.
Yeah.
It's changing very, very fast. If you go back to the early days of hedge fund business, there was people coming in with suitcase of cash as well. It just changed it just evolved very quickly because it was institutionalizing as well. And same thing with crypto. Crypto user in the early days were not the best user, and it has transformed over the years, and it has improved, and it has become this very, very different type of animal. Now, you're talking about writing a book, there is this kind of old book in traditional market called Market Wizard. There will be definitely space for a market wizard of crypto at some point, and maybe not just one volume, maybe a couple of volumes.
Yeah. It could be a whole series. So you were talking about the evolution of the market. It is changing so fast. I mean, at least for me, the past 4 years have just been a blip. And, it's kind of hard to conceptualize the growth and the amount of people and capital that have poured into this space. How do you see it evolving over the next year? What sort of things do you anticipate happening that will kind of make the market more robust?
A couple of minutes ago, I told you, there's this subtle equilibrium between risk compliance and trading. And depending on the period, one is kind of like gearing up and the other one is a bit more following. And right now at CoinShares, because of what happened, you get a very strong oversight of risk and compliance, which is completely justified and which is like making sure we are resetting correctly. But at the same time, what I see with that is like CoinShares is just like a lab of what's happening in the outside world. And I think, the mission of the regulator is to protect retail investors. If you look at how many people get hurt by Terra in general, if you go to Reddit on Terra, you can see people which are suicidal. If you look at how many people get hurt by all these lending platform who got shut down, Chapter 11 or anything, which is very unfortunate. But again, it's retail investors who get hurt. If you take one of these companies, the average claiming millions of accounts, the average account size is not billions of dollars or millions of dollars. The average account size is probably like a couple of grand. So if it is a couple of grand, that's a lot of people who are suffering from this loss. Mm-hmm. And this couple of grand means something for these people.
Yeah.
So we have to be absolutely acutely aware of that. And as a consequence, I think we're going to see the regulator coming in to ask for accountability and to ask for, okay, guys, how do you plan to make that not happen? And by the way, we're going to make sure ourselves it's not happening by putting this law together to make sure you are not doing that again. We saw it in the mortgage business. If you look at pre-2008 and post-2008, it's two different businesses. So I think the only fear I get is like the absence of regulation for so long is going to result probably in over-regulation at the gate. And it's going to be our mission as an industry to come together to make sure that, A, we are, if not self-regulated, regulated whenever it's possible. But it's also going to be the mission of users to make sure they are going with the right actors, because it's very easy to go with the more saying. If the more saying is non-regulated and offshore player, well, you can only blame yourself. So it's I think both the industry need to grow up, become more regulated and more accountable for what's happening. And at the same time, the user need to be more realist about if someone offers you something too good to be true, well, maybe it's too good to be true. And that's why you get regulated actor and non-regulated actor.
Some sagic words of wisdom from JM.
Not sure if the wisdom, but it's just like the direction of travel seems pretty clear. And you can see all the action that Sam is doing in the US is trying to make sure that not too many people get hurt by these events. So as a regulator kind of sees that and kind of, okay, crypto is an agitated teenager. We just need to calm down a little bit, but, we don't need to take a too severe action, So I think that's the whole idea. But, unfortunately, I think we're still going to see the regulator coming out with a pretty heavy hand.
We'll see what Mr. Gensler has up his sleeve.
But, that's why CoinShares has been regulated since the beginning, and we believe we should be regulated, and we keep pushing for regulation because that's the only way to make the right triage between different players.
JM, thanks so much for joining the show today. Appreciate you stopping by. We'll see you in person soon. We can record in person at some point. Where can our listeners learn more about you and what you're working on at CoinShares?
CoinShares.com or my Twitter account.
Easy.
Thanks
for being on the show.
Thanks, Frank. Take care.
The Scoop will be back for you again with another great guest. Have an awesome day.